Hey there, Chip Nellinger with Blue Reef. Wanted to talk to you about a very unique situation developing in the soybean market here over the last couple of weeks. Got some information, and the market's kind of sniffing out the possibility for some Chinese business coming in to buy U.S. soybeans. Go back a couple of weeks here, and the market was reacting to a tweet from President Trump that said that he had asked China to purchase an additional 8 million metric tons of soybeans ahead of or around and in relation to the upcoming U.S. China trade talks that are scheduled for early April. That really took the market by surprise. Prior to that, we were kind of entering into the early stages of the Brazilian bean harvest in early February. That picks up pace and steam as you get into the end of February, first half of March. Full swing on the Brazilian bean crop. And by all intents and purposes, it looks like it's by far a record crop out of Brazil. In fact, we got confirmation on February 11th from the USDA on their monthly WASDE supply and demand report that their estimate is that Brazil produces 180 million metric ton crop. That would be by far a record. That would be the equivalent of about a 6.5 billion bushel bean crop. In relation to that, just to put that in perspective, the United States produced this past growing season about a 4.2 billion bushel bean crop. There's some people that think, as far as private estimates go out of Brazil, that crop could approach 185 million metric tons, potentially swelling up towards just under 7 billion bushels. They're going to be highly competitive on the export market against U.S. beans. So this tweet that President Trump put out a couple weeks back here really took the market by surprise because we were starting to roll over to the downside going into this Brazilian harvest. The tweet really took the bean market by surprise. We rallied about 90 cents, almost straight up. Let's take a look at the chart just to give an example of what was happening here in the bean market over the last couple of weeks here. What we're going to be looking at here is the May bean contract. This is the May CME soybean future from my eSignal charting software package I use to track the markets. Going back here a couple months, we saw a similar type event happen in October, late October. Again, a tweet out of the blue. President Trump said, had a meeting with China. We're going to help the U.S. soybean farmer and the U.S. producer. China's going to buy a large amount of soybeans. This is when the government was closed and the government shut down. So we didn't have the benefit of seeing commitment to traders reports because the government shut down. So we didn't really get a feel for what the commodity funds were doing in this roughly 4-week period of time. What they did was unprecedented. They went from about a flat position, maybe slightly long, to a record long position well north of 200,000 contracts in just about 4 weeks' time, digesting very quickly the potential for, and in hindsight, China did end up buying about 12 million metric tons of U.S. beans. The bean market quickly digested that, said, you know what, that was great. The demand was good, but that's probably all that China's going to buy, and we're likely going to have a record Brazil bean crop when they start harvesting in February and March, and immediately sold off and gave back all of those gains in a very short amount of time. It did allow the U.S. producer to get some beans sold at close to profitable levels. It allowed the Brazilian producer who had a lot of beans. They were deep in their growing season at this point in time and knew what their yields were going to be. It allowed them to get some sales and hedges in place as well. Fast forward here a week ago, same thing happened, right? It shocked the bean market. If you look at this day right here where my cursor is, that was the Friday before, 2 weeks ago Friday, that President Trump on Monday tweeted out, on Tuesday of the following week, tweeted out the most recent tweet. He asked China to buy 8 million metric tons of soybeans. The market took no prisoners, immediately traded about 50 cents higher that day, and has since added on about another 30 to 35 cents. All total, in just about a week's time, a week's trading time, The bean market's tacked on about 90 cents a bushel. But we've got right back into this green shaded area, kind of signifying a little bit of a resistance area between some congestion between the previous lows down here from back in right around Thanksgiving time frame. Those came in right around 10:35, and a previous swing high that came in on the 1st of December that came in right at 1060. So we're right in that zone. The market a few days ago showed a lot of resistance. We pushed sharply higher on that day, and then closed just a little bit higher on that day, leaving this large selling wick on the candlestick chart. That means that there was a lot of selling pressure in here, most likely hedge pressure from the U.S. producer as well as the South American producer. Now, we did have the February crop report. It, by all intents and purposes, was bearish. They saw an increase of 2 million metric tons on the Brazilian bean harvest and bean crop size. That means over a 2-month period, the January and February crop report saw a 5 million metric ton increase by the USDA up to that 180 million metric ton mark. Most people think that could end up being slightly bigger. So the market held together in the face of a fairly bearish report. But if you're a trader speculatively in this market, more importantly, if you're a hedger in this market, it is really taking a lot of planning. You need to kind of know what your plan of attack is, have a plan to manage this risk, because just as fast as we rallied, we could wake up some morning, see a tweet overnight, see trade talks delayed, see China respond in a negative manner saying we're not going to buy any more U.S. beans. Something happens with China-Taiwan tensions. There's a lot of things that could come up and pop up and make this most recent rally something that in hindsight needs to be rewarded. So if you're trading this speculatively, manage this very, very closely. Obviously, you got to give it room. The trend is your friend right now. It is up. If you're a hedger, again, have a plan of attack. Don't stick your head in the sand thinking that bullish news from China is going to bail us out. Could we end up into new highs above the highs that we saw in mid-November that came in just shy of 1180 on the May contract? Absolutely. China could, in fact, come in and start buying U.S. beans, confirmed purchases, and push this market up to these previous highs or into new highs near $12. That's entirely possible, but you got to have a plan of attack, right? How much room do you want to give this market to chop around in order to prove itself? If you're a hedger, obviously you got to be a scale-up seller in here of any old crop beans that you have left, and certainly on the speculative side, this market could give back these gains very, very easily. So, very unique situation. I don't know how this thing will pan out. It's a very unique situation with this current administration because of the trade deals, because of tweets affecting the markets. It really kind of throws things out of whack. And from a fundamental perspective, I think prior to this report, this market, in the case of beans, was ready to roll over and likely push into new lows just because the supply was so large. We have a 350 million bushel carryout domestically or the United States. Brazil's expected to have that record bean crop. They're early on in their harvest. And so that harvest pressure is ahead of us. And I think the market sensed that. Snap your fingers. We've got a different fundamental situation. Is the market reading this correctly? I'm going to argue that it's not. The immediate momentum chasing funds and the trend followers certainly liked that tweet, and the market has responded to the upside. But is the market reading it right? Only time will tell. Let's take a step back and realize that China, to this point in time for this calendar year, has purchased the fewest amount of U.S. beans really in the last 10 years. If they come in and buy another 8 million metric tons, that equates to about just a shy 300 million bushels. I think the market, in some cases, erroneously believes that if China buys another 300 million bushels of U.S. beans, since our carryout is projected to be 350 million bushels, that means we essentially are out of beans, out of carryout. It would take our carryout down close to 50 million bushels. I think some of the headline reading algos that don't really have much human reasoning necessarily. And some other market participants, in hindsight, may find that they were misreading that. Now, the trend is your friend. The market certainly is headed higher in the short run here, and you have to respect that. Could it go higher? Absolutely. But we also have to be on the lookout, because the flip side of that assumption is that because China had purchased so few beans from us already, our bean export projections are 1.65 billion bushels. In that export projection, the USDA obviously assumes that China is going to take a certain amount of U.S. beans. Historically, they've taken near half of our exports. And so even if China does buy an additional 300 million bushel beans, that puts them still under total what they've purchased over the last couple of years. And so if they buy that, we may not move the carryout much lower, because we're going to actually lose some additional export business, because Brazil beans are cheaper by $1.20 to $1.30 right now. So if China buys, great news, but it's likely going to prop prices up, shift other non-China buyers that would have bought U.S. beans down to Brazil because they're cheaper. Net, we may not really gain much as far as total demand goes, even if China does buy the 300 million bushels. If something goes wrong in the process of the trade talks, or China balks at the ask to buy 8 million metric more tons additionally of U.S. beans, then this market could reverse course in the snap of a finger and really push into new lows based on the potential for that large harvest out of Brazil. So very volatile situation, very unique in the bean market, and the fact that it's really headline driven, it's tweet driven, and it's almost a binary. The trade deal will happen, the trade deal won't happen, and it's almost impossible to plan from that perspective. If you're a hedger or a speculator, you have to run your stops. You have to know how much room you want to allow to give this market going both directions. And you certainly need to pick your targets on where enough is enough, and you need to sell, get out of a position, or get into a position if you're a hedger and a producer standpoint. So interesting situation. We'll mark this and watch this along the way. We'll comment on additional developments in this bean market. But certainly, if there's any questions in the meantime, don't hesitate to reach out. Thank you.